Excellent. Well, good morning, everyone. Today, I'm very excited to share the findings of our research since the Digital Finance for Resilience program started in the Caribbean in 2022. As most of you know, our program involves multiple interactions with communities, companies, regulators through the implementation of various activities delivered via three main modalities. But I think most of you are familiar with the United Nations Capital Development Fund. Perhaps the most interesting distinguished factor between the United Nations Capital Development Fund and other UN agencies around the world is that the UNCDF can provide blended financing mechanism to the private sector directly. So on that note, the program we started in 2022 actually is a brainchild of Ram, who presented this program. He designed this digital finance for resilience program around the Asian countries, Pacific and African countries. And this is the program, the way we implemented in the Caribbean region. So we have first the policy accelerators, where we work directly with the central banks to help them define the regulations as well as licensing and supervision framework that is more conducive to digital financial inclusion without necessarily increasing risk to the overall financial system. The second main modalities we have is the FinTech Accelerator, where we work directly with the FinTech to address barriers to digital financial inclusion. And the FinTech Sprint, you may have heard about it. We launched one last year, which is fascinating because essentially what it does is like we identify, say, a government agency, and that wants to address a particular problem, and we help this agency define the problem more specifically. We help the agency scope it out in a way that it can be addressed by a fintech company. So then we launch a call for solutions, and then once we identify the right fintech company that can address the problem in a viable manner, then we act as the intermediary to facilitate dialogue between the two, because as most of you know, fintech companies and government agencies do not necessarily speak the same language. So we help with this dialogue to make sure that they can work together to co-design the solution that makes sense, and again, that can be implemented in a way that it's financially viable for the fintech company. And then finally, we support policymakers to understand the value of investing in digital financial services, products, as well as infrastructure. Hence, the purpose of this working paper that I want to share with you today. So the paper is called No MSMEs Left Behind, the Imperative for E-Commerce and Digital Economies in the Caribbean. So let me share with you the summary findings, starting with the context. So micro, small, and medium enterprises represent 90% of all firms in the Caribbean region. So they essentially offer a wide range of products and services to generate income, both in the formal and informal sectors. And what's interesting to note here is that in 2017, the IDB conducted a research and estimated that the size of the informal sector in the Caribbean ranges about between 35 to 44% of GDP. And that's huge. Imagine if all these informal businesses were able to access the international market or even the tourism market in the Caribbean region, because just before the pandemic, the Caribbean experienced 7 years of consecutive growth in tourism arrivals. So in 2019, we had 50 million visitors. That is 10 times our population in the Caribbean. It represents a huge market, untapped market for MSMEs. Meanwhile, we experienced 4 decades of declining economic growth in the Caribbean region. So what is happening? We have more people coming to our shore every year who are willing to spend more on our products and services, not only before they come, during their visit, but also even after their visit. And also the entire global economy is growing. So why are we so lagging behind? There are, of course, many factors that affect growth, and some of them are explained in the report, but we have sufficient evidence to claim that MSMEs are essentially have been excluded from the digital economy. So if we want to integrate to integrate the digital economy, MSMEs need access to digital payments, both either in person or online. And we conducted financial inclusion surveys in different Caribbean countries, and we found that 80% roughly of MSMEs do not use digital payments to process transactions. So how on earth can we expect MSMEs to conduct e-commerce or to access visitors when we know that these visitors, international customers as well, like to book online or pay using cards? Also, we found that 75% of MSMEs do not have access to a business bank account. So what do the small and micro businesses do? Well, they use their personal accounts either in a bank or in a credit union. But the credit unions are great, but the problem with the credit union in most Caribbean countries is that they are not integrated to the ATM network, nor the ACH network for electronic funds transfer. So if you live in the Caribbean, you know at 4 p.m. there's a huge lineup on the sidewalk, and that is not to get access to happy hour, but is often time for people to have access to their money over the weekend because the credit unions may not be open in some places. So this is a problem. And then also finally, another point worth mentioning is that essentially about 10 to 20% of the population, adult population, in the Eastern and Southern Caribbean region are essentially completely excluded from the current financial system. And about half of those that are included, they actually have an account in the credit union. So I just wanted to perhaps note importantly that these estimates are extrapolated from this research as well as financial inclusion surveys, but the data varies greatly per country. So it's important to keep that in mind along the way. So why are MSMEs excluded? So there are four main issues that I want to share with you. They are more in the reports. There are more details, so you can download it. Actually, I would ask my colleague, if possible, to share a link to the draft report for people to have access to it. But let me go through these four issues briefly, one by one. So the first issue is that in the Caribbean, the requirements to open bank accounts are overly stringent for both individuals and businesses. So banks around the world must comply with international standards for KYC, know your customer. But the problem is that the bar is much higher in the Caribbean. Look, you can see on the slide some of the basic, the requirements that are requested by banks in the Caribbean. Just to put things in perspective, when I moved to London in 1999, I moved there to learn how to speak English, and I was going to be there for 2 months. And the first thing I did was to open a bank account because I lived in a hostel and I just didn't, my door was not locking and I just needed to have my money somewhere safe. And I opened a bank account. And a few years later, when I did my master's degree, I went to move, I moved to Sri Lanka for several months again, actually almost a year, ended up being a year. But I was volunteering to help rebuild the country post tsunami. And again, I needed a bank account to transfer my student loans to Sri Lanka so that I can live normally. Why is it 20 years later in the Caribbean, my gardener, my trainer, my babysitter, the plumber who fixed the plumbing in my house, why is it that all these people want to be paid in cash? Well, they tell me that either they cannot open an account in a financial institution, or some of them, they say that it takes about a week to get access to their cash. So why is it like that? Well, many banks blame regulators for this situation, but in reality, the Financial Action Task Force, which is mandated by countries around the world to define the standards for KYC, they recommend a risk-based approach, and they recommend that for lower risk customers, the due diligence can be much more simplified. So all that the banks need to do is to implement the risk-based approach, but in the Caribbean, it's not really implemented. Fortunately, there is technology that can ease the process. Some of them are listed here. Also, what we found that is critical, and this is where UNCDF has played an important role in the Caribbean, is that we bring together the financial institutions and the regulators in the room. We've done it before, like in the workshop, and it's fascinating to see. So the banks are saying, well, this is the regulators are asking that, and the regulators are saying, no, in our country, we have a three-tiered approach to KYC, and you can implement simplified due diligence. So this is just an example in Trinidad and Tobago. You can see the second tier in the middle. The regulation in Trinidad and Tobago say that for second-tier customers, You only need a form of identification. It doesn't say that you need to have a proof of address. And in the third tier, for considered higher risk customers, do you need a proof of address? But they're not saying that you absolutely need a utility bill, because a lot of individuals don't have a utility bill. It says that it could also be other things like a hire purchase agreement or a credit union account. So this is just to give you an example that by clarifying guidelines for the risk-based approach, it enables the financial institutions to lower their requirements for customer due diligence. That brings us to the second point, second issue, that's explaining why MSMEs are excluded from the digital economy. And that is that MSMEs are unable to acquire or maintain digital payment solutions. Either they're not accessible or sometimes too expensive. So first of all, if you live in the Caribbean, you know that international platforms like Airbnb or YouTube and payment processors like PayPal and Stripe are not readily available across banks and credit union. So we don't have data on this, but a lot of people using Airbnb in the Caribbean region actually have a bank account abroad. They don't, because these international platforms oftentimes are not integrated across all financial institutions. Of course, there are exceptions. There are some larger banks that enable this process. But if you have talent and you want to generate advertising revenues on YouTube, you think you can just go and sign up and just start generating revenues? No, because the YouTube platform is only accessible in Jamaica, for example. But the international paper processors like PayPal or Stripe, they are in some cases, again, accessible, but there are always penalties and additional requirements. Now, so what do the businesses that can have a bank account do? They need to have an online, if they want to have an online payment gateways, or if they want to have a point of sale device, they need to request a merchant account in their financial institution, because only financial institutions can provide access to the merchant account that allows you to process credit card from Visa, MasterCard. So the problem again is that the financial institutions in the Caribbean, they're not only conservative to open business accounts, but also even more conservative when it's about providing access to credit card processing to get access to a merchant account. So that's a challenge in the region. And then again, when it's accessible and you have access to a merchant account, the cost of maintaining the point of sale device oftentimes is extremely difficult, especially when you have a seasonal demand. When we have lower months, it's very hard to pay for to justify the cost, the fixed cost or the rentals cost of point of sale device. But fortunately, again, the situation is changing. We are moving on. And we have, for example, 5 years ago, when I consulted with financial institutions, banks in the Eastern Caribbean, many of them did not even have an online payment gateway to offer to their business customers. Now, the First Atlantic Commerce have penetrated the entire Caribbean market, and they are essentially across all countries and in most financial institutions. So essentially, the online payment gateways are available. In terms of online, the second point here, the online marketplaces, that's super powerful for the underbanked. This is an example. I can share with you an example that came out of our fintech sprint last year. So the Ministry of Agriculture wanted to have the farmers to be able to access the market, the restaurants, the visitors, but also the local domestic market. And they wanted to have the farmers to be able to sell online. So OnQ designed an online marketplace where the OnQ has the merchant account with the financial institution. So OnQ can process the credit card payments and then disburse the money into the credit union accounts of the farmers. So that's a very powerful way of addressing the problem for underbanked that perhaps will struggle to have access to a merchant account anytime soon. And then the third potential interesting solution here is to have open financial account in a mobile wallet. In a digital wallet. And that's powerful because a lot of businesses, especially in the Caribbean, micro businesses, they operate their businesses not via websites, but via WhatsApp or via Instagram. So the mobile wallet can allow you to eventually use text to pay with buttons that can be shared so that payments can be made. Mobile wallets actually are super powerful for unbanked and underbanked individuals, not only to process transactions. If you can see on the left side, the mobile wallet can be used to have access to digital money, or to have access to funds to be paid. But on the right side, you also have other financial services that can be accessible via mobile wallets. So, for example, parametric insurance. We have done a pilot in in Dominica actually, and where eventually you can have the insurance that when an event occurs, let's say a hurricane, the wind speed reaches a certain level, automatically the payout goes into your mobile wallet. So imagine how powerful that is to accelerate recovery after a disaster. Also, savings. We found that studies have found that oftentimes when you have a mobile wallet, when you can store your funds, there's a decrease into impulsive purchases. So that's probably true for everyone around the world, but also enables to save. And small businesses, to be honest, like a lot of them, micro businesses, they're not gonna use a computer anytime soon to manage their cash flows or to manage like the HR customers. Well, there are lots of business management applications now that allows micro businesses to manage their operations much more efficiently using their mobile wallet. And of course, smart contracts. We have great examples in the Caribbean region, especially in the agrotourism sector, where farmers historically, it would take months to get paid, but oftentimes now with the smart contracts, when a specific event occurs and to the network, then automatically the farmers can get paid. So it's super powerful. Anyhow, moving on, we're to the third issue that explained why MSMEs are excluded from the digital economy, is that these e-money issuers, the companies that can offer mobile wallets, they lack the legitimacy and opportunity to deploy their digital wallets. So first of all, there have been some uncertainty in the regulatory environment in the Caribbean. Actually, in some of the Caribbean countries, the legislation for e-money issuers did not even exist last year. Actually, in some countries, they don't. It's going to be released this year. So obviously, regulatory clarity will support and facilitate and improve legitimacy of e-money issuers. Now, the second issue here is that the fintechs struggle to open an account with the financial institutions. So this is really bad. So think about it. Like if e-money issuers, a company that has a mobile wallet, wants to open a bank account and cannot open a bank account, what's going to happen to safeguard the funds? Because imagine when you have a mobile wallet, the company takes the money cash and then issue the money into the digital wallet in a digital form. So the physical cash needs to be stored somewhere. This physical cash needs to be safeguarded in a safe space so that when the mobile wallet owner wants to have access to the money, it can be released automatically. So if the e-money issuers cannot open a bank account in a bank, where is this money going to be? So fortunately, in many countries around the world, this issue has been raised, and the central bank allows these e-money issuers to open an account directly with them. So there's examples in the UK, Lithuania, Brazil, but also central banks in the Caribbean, fortunately, are increasingly interested in exploring that option. It's coming soon, I'm hoping. So, and then the third issue is limited economies of scale. So, as you all know, fintech companies must invest heavily upfront into the technology to make sure that there's cybersecurity, make sure it meets the standards, the registration, the licensing. There's a lot of investment upfront that are required by the fintech companies. So, if there is no opportunities for economies of scales, then obviously they won't be interested. And fortunately, in the Caribbean, despite the fragmented markets that we have, progress is being made to harmonize the licensing procedures across some of the countries. And also many islands are now exploring instant payment systems. So IPS, instant payment system, it's very powerful for financial inclusion, because what it does is that the system allows the e-money issuers, as well as the credit unions, as well as the banks, to all connect into an interoperable system, and it allows the transfer of money to go among the different stakeholders, and that process is transferred instantly. So it's extremely powerful, especially in the Caribbean, because the ACH network in some Caribbean countries is owned by the banks. So the banks will not allow the credit unions, or will not allow the e-money issuers to integrate to facilitate transactions. So extremely powerful. And obviously, government payments. Government payments is a huge opportunities to increase economies of scale. And that brings us to the last and final issue that I want to share with you. So in the current, historically had a low demand for digital payments, given that the value proposition is unclear. So we do, even though we have a few mobile wallets in most Caribbean countries, deployment is difficult and adoption is very slow. Most people don't understand the intangible opportunity cost of the cash economy. People are happy with their cash at the moment. You know, behavior change is hard. But if you compare, for example, the pain points in the Caribbean versus, say, in Kenya or in India, where people have to work, to walk or travel for hours to have access to cash, the situation in the Caribbean is not like that. So if we want to increase adoption in the Caribbean, we need to increase the number of use cases. We need to increase the value proposition for the consumers. So government payments, as I said, is a great idea, because not only to pay for your, say, your driver license and things like that, but also to receive benefits. So we have explored the possibility, for example, in Trinidad and Tobago with the Ministry of Welfare to see if we can have social benefits being disbursed directly into mobile wallets. So that would obviously increase the value proposition for the users, and it will increase the adoption. So, but there are many other examples. Partnership can be done to increase complementary of financial products that are delivered via the mobile wallet. And of course, as I said before, if the system is interoperable, then it also increases the value proposition, because money can be transferred from different stakeholders. Okay, so I'll stop here. I guess one last slide is like, okay, how do we make sure that all this is happening? Well, there are key enablers for inclusive digital economy, and I'm not going to go through that because this requires another hour of presentation, actually a whole day of workshop. We use these key enablers that have worked in other countries to define a financial inclusion strategy. So we're doing that in Trinidad and Tobago. We're also doing that with the central bank in the Eastern Caribbean Currency Union. We look at the different enablers, and we help the stakeholders or the policymakers to identify priorities to increase digital financial inclusion. And that's it. Just leaving you with a call to actions. So two calls for action. So the first one is the Caribbean Digital Finance Alliance. So for inclusion. The idea of the Caribbean Digital Finance Alliance is, as opposed to, for example, a fintech association, is that in the digital financial sector, if we want to make a lot of progress, we need better collaboration between the private and public sector, as well as the donor community and the development community. So the idea of the alliance is that it brings all these stakeholders together, and it helps to define priorities and helps to provide, to do advocacy. And the Global Alliance for Digital Finance Association is there around the world to support the establishment of Digital Finance Alliance. So we are going to have a webinar on the 28th of August, where we have, the three first speakers on the left on the screen. You will see these people have established digital finance alliances across the different countries around the world, and they'll share their experience. And on the right side, we'll have stakeholders in the Caribbean to help us think it through. How do we make it work in the Caribbean? Because even though we can learn from the experience of others around the world, the context in the Caribbean is different. We actually have multiple islands together working. So how can we make it work in the Caribbean? So I encourage you to join us in this webinar on the 28th, and to learn and engage on how we can make it possible. And then finally, my last call for actions, and then I'll stop here. We'll open up a question and answer, is that this report, hopefully my colleagues put it in the chat, the link to the report. The report, we spend a lot of time and efforts to try to capture the root causes of the problems and potential solutions. But to be honest, this report is kind of, obviously it's boring because it's not really alive. What we want is to make it more interesting, we want to promote our fintech success stories. So we want to capture more stories. We want to inspire and foster knowledge sharing among the different solution providers. So please write to us, send us stories, send us insights, and we can integrate that into the report and making it way more interesting, way more alive, and share it to mobilize stakeholders so that we together can make a difference. So that's it for me. I'll stop